Hi everybody, this is Q from Hyperstocks. Thank you so much for joining. In this video, I'm going to show you guys how to trade options with some strategies. These strategies have been working for us in our group. We've been doing these strategies for months. For July specifically, we've been averaging about $175 to $200 a day if you add up all the days we've been trading. Sometimes we experience losses, but a lot of times we experience wins. And as long as the outcome is income, as they say, we are successfully trading. So in this video, I'm going to focus on these trades right here, these 5 trades. These are trades that we took on today, and we were able to close out of the day with $231 in profit. So without further ado, let's go ahead and explain how we traded the stock market today, which strategies we used, and why we chose those strategies when we did. So let's go ahead and get started. I'm going to move over to Think or Swim. This is the platform I'm using here. And we're going to start off with AMD, which is our first trade today. So let's go ahead and take a look at AMD. So AMD was traded at 6:35 in the morning. This was right into market open. This is West Coast timing. So this was 5 minutes into the market open. We typically don't enter stocks that early in the day unless there's an exception to that rule. Typically, we like to give the market about an hour of development before going into anything, just because we like to let the morning movement settle. However, AMD did show us an attractive chart this morning, therefore we hopped on when we did. AMD has been a stock that's been coming down for quite a while now. We know that it's been down about 20% in the last 20 days, so we were waiting for a bounce for us to get in. Now, in the last week or so, we can see that the market has circled around and has been rallying. However, AMD has been lagging behind. You can see that AMD barely started its upside rally when SPY has been rallying for about a week. Therefore, we were waiting for this one to catch up, but we were waiting for the right moment, and we were also waiting for a confirmation of reversal. So AMD has been trending down day over day. This is the last 5 days, and you can see that yesterday AMD happened to close above its previous day's highs. So here, when we look at AMD, when we zoom in a little bit closer, you guys can see that here it made a lower low, and once again, even though it looked like it bounced, it still closed below its previous day's highs. However, it closed pretty high towards that place. Therefore, we can start assuming that there are buyers that are coming in. It wasn't good enough for AMD to just bounce. We needed a confirmation close above its previous day's highs. So here, the previous day's highs were in pre-market at 75.90. Here, even in post-market, it barely made it to 75.30. Still not good enough. However, yesterday, AMD managed to move above its previous day's highs. Therefore, it indicated that there is a reversal that's coming. Given the fact that the entire market started moving up in the recent weeks, we can start assuming that AMD will catch up. Now, AMD is a high delta stock. With high delta, I mean it is a stock that moves very strongly once it breaks out. So we were waiting for that breakout. Knowing that the stock had officially gave us a reversal indication yesterday, this morning the stock was on watch for a move. Already in pre-market, the stock was moving up. Already we were seeing strong relative strength. Therefore, right in the open this morning, once we saw that move up, we took full advantage, and this is the strategy that we used. The strategy is very easy to apply, and you can apply it as long as you give the stock just a few minutes of development in the morning. You typically want the stock to make a high and then come down to make a low. Once you see that the stock is bouncing in between those two spots, you try to find the overall trend. Obviously, we found the overall trend on AMD to be bullish as of yesterday, considering it reversed above its previous day's highs. So with that being said, we were looking for this as a bullish contender today. So the first move up was a strong relative strength. You can see here, strong volume, came down, retested this level, and we sent our alert out or entered the stock at 6:35 in the morning, as you can see here, and we entered an $82 call. 76.50 was our stop loss. So why did we use a 76.50 stop loss? You are creating a range. So when you are looking at AMD in the morning here, before anything has developed, all you see is a range. So you know the high here is $77.75, and you know the low here is $77 or so. Therefore, you would want to place a price target above the high or at the high, and then a stop loss just below the low of that range, just in case the stock does break and moves further down. So you always want to be protected against the downside move. Now, our price target on AMD was $79 to $81, And this is because when we looked at the 20-day chart, we noticed that there was a resistance back on the 30th of June that was created around 78.50 and to 79. So there was a resistance in this range right here. You can see that the stock had gotten rejected above these levels twice, and this was the only untested resistance that was in AMD's way from the morning breakout that we saw. Therefore, our price target was right in that range, which was the price target in which it finally reached, and we were able to take profits, closing about a 20% gain on this. So this was a successful trade. It was a very easy strategy. Again, just a morning time strategy where you take the resistance and you take the support and you create your price target, whether you're betting up or down. In this case, we knew that the trend was starting to look up. Therefore, we were able to take a bullish trade on this stock. All right, so let's take a look at the next trade. For this trade, we used the 10 and the 20-day moving averages, and we were trading SPY. So just like AMD, this was also a call, and this was also a day trade. We only took on 4 total contracts. So you can see that our position sizing is relatively small. We haven't spent too much money to make pretty decent returns. We had a total of 4 calls for a total of $444 on SPY. Let's see what strategy we used, and let's explain the trade for you guys. So for this specific trade, we entered at 7:35 in the morning. Remember, this is West Coast timing, and this was entered right over here, right at 7:35. We primarily used the 10 and the 20-day moving averages, and we circled back and forth between the 1-minute and the 5-minute candles. So remember, AMD strategy was the morning box. You create your resistance and your support, and you choose your price target from there. For SPY over here, we're using the moving averages, and we're circling back and forth between the 1-minute and the 5-minute. Let me explain how that works. So 1-minute candles in this specific case were able to tell us where the stock was trading above or below the 10 and the 20-day moving averages. So right off the bat, we knew that SPY was still going in a bullish direction. Day over day, it was closing above its previous day's highs, and it maintained that same level this morning. So just like AMD, we have the resistance and we have the support. So we were able to get into a trade and create a range for ourselves, and the range looked like this. We had our stop loss set at 386, which was below the 10, 20, 50-day moving averages, and also below the morning time double bottom support. So you can see that the SPY or the market bounced here once and here again. So our stop loss was just over here, just at 386. Our price target was high of day. So our price target was 387.60 to 388. So let's see what this looks like if we just don't include anything that's already happened past 7:35. So at 7:35, when we entered our trade, this was our entry over here. Our price target was just at high of day. All we wanted was for the market to retest high of day. We knew that it would, or the probabilities that it would were high, only because of how much volume and momentum we saw throughout the day. So we entered here, our stop loss was 386, and our price target was high of day, in which you can see that the market moved to high of day about 15 minutes later or so. Then we closed 204 at the price target. However, at 7:55, we decided to hold a little bit longer. You guys can see that price target achieved. We closed 204, but we maintained the other two because we wanted to extend the potential outcome for our trade. However, when we saw that the market at 7:55 was moving higher, and we were able to capture more profits, it was moving higher. However, at 7:55 a.m., there was a clear negative divergence on the RSI. If you're not familiar with what a negative divergence is, it pretty much means that the market is moving higher, but the RSI is moving lower. That is a weak sign, and you want to look out for those weaknesses when you're day trading. So if you only plan to be in the trade for less than 20 or 30 minutes, then you want to look at the RSI on the 1, 5, 15 minute, and 30 minute chart and make sure there are no weaknesses. If you're holding a bullish trade and you're starting to see that the RSI was showing some weaknesses, you can see that right here the RSI was higher, and even though the market pushed higher at 7:55, the RSI was still weak compared to the morning. Therefore, we sent a setup closing alert and we took profits at 120. This was a small gain of about 8%, so not too much gain. However, we were still able to walk away after closing 4 with about $38, so not a bad trade. Now the next trade was a Tesla. This was a Tesla call in which we also day traded. You can see we entered 2 contracts, so not 4, because this was a little bit of a more expensive contract and we didn't want to spend over $1,000 on anything today. So we wanted to just stick to smaller positions. We entered 2 contracts. Let's see how that trade played out. So let's pull up Tesla's chart and let's pull up the Tesla trade setup in which we took on today. And let's see how it worked out. So at 8:57 in the morning, Tesla was starting to test high of day. So SPY was going up. We knew that the market was trending higher. Tesla finally broke out of this range that it's been consolidating in. You can see that yesterday Tesla peaked above its previous day's highs, and then this morning already at open it got a very strong hourly candle that pushed it way above yesterday's highs. So now it's in a breakout phase. Anywhere above this level right here, the stock is technically still in its breakout point. So when we saw Tesla hold its highs for most of the morning, this was an attractive place for us to enter the stock. We also used the 10 and the 20-day moving averages for guidance, which are this blue and purple line, and we used the 1 and the 5-minute charts for this specific trade. So at 8:57, if I'm not mistaken, we noticed that the 5-minute chart, it was starting to push above Tesla's highs. So Tesla was flirting with the high of day, as you can see here, and then it finally started to pull back. We got in right on that pullback to the 10 and the 20-day moving averages, and our stop loss on Tesla was at 717. So 717 for Tesla was just below this previous support test, so we knew that Tesla came down here. Buyers refused to let it go below 720, and it bounced back strongly. After bouncing back, we took advantage at 8:57 around this point on this pullback for an entry. We placed our stop loss below this point, which is the previous test, and our price target was 730 to 731. Let's see where we got that price target from. So we knew that Tesla was already breaking out over here, and we wanted to look for the next available resistance that was in Tesla's way after the breakout. Looking back, no resistance, no resistance, no resistance, no resistance. Here we go. Finally, we're seeing some resistance, and you can see that at the top of this hourly candle, this little wick is a rejection from that point, which is right at 730.82. You can see $730.82, which was the price target range that we had, and you can see that Tesla actually broke above that point and it continued moving higher. But at that point, we had already taken profits from Tesla, and we were able to close. We actually closed a little prematurely on Tesla. We only made $60. Believe it or not, these calls actually moved on to double, so we would have made about $700 if we had held towards price target, but we had taken profits a little prematurely. Nothing wrong with that. We still walked away profitable. Now the next trade we took on was a BABA setup. We only took on 2 contracts. We bought it for a total of $398, and we took an $8 loss on this. Let's explain how that worked out. So BABA, we were watching the 5-minute candles for this, and we actually took on the setup right here. What we were waiting for or watching was, considering the market was generally moving higher, we took on BABA right at that 50-day moving average. You can see that when it pulled back to it in the morning, it bounced. When it pulled back to it again, it bounced. So we were waiting, and our strategy here was, this was the 5-minute charts, and we're using the 50-day moving average. So we were waiting. We entered right here on BABA. Actually, let me pull up the trade for you. That way you can see it for yourself. We entered right here at 10:02 on BABA, which was right at 10 o'clock. You can see that it's 10 o'clock down here. This was a 5-minute candle, so through this development, and then very quickly, just 8 minutes later, this candle right here opened below the 50-day moving average. Therefore, we sent our closing message. We only took about a $8 loss on this, still leaving us profitable in the overall day trades. And finally, we took on an Apple call. Now, Apple was a fun one. Apple was a breakout strategy. A breakout strategy is exactly what it sounds like. We were waiting for Apple to break out all day. It tested the high once, and it continued moving in that high range. It never moved below its VWAP. Therefore, the volume this is called the VWAP, volume weighted average price, which means that if the stock is maintaining a level above it, it's mostly bullish for the day. If it's below it, if it's been below it for most of the day, that means it's mostly bearish. Now, knowing that the market was generally moving higher today and we saw a lot of momentum, we don't usually take on breakout strategies. We always like to enter on pullbacks. However, Apple was just getting closer and closer, and it started creating what looked to be an ascending triangle that eventually pushed it higher. And you can see that it broke. We entered Apple. Let's pull up this chart. Let's pull up this trade for you. We entered Apple at 10:42 a.m., which was right at this point right here. Right when it broke 146, we saw volume jumped. You can see that volume here was strong. So we took on our calls. We took on a 148 call expiring 7:15. By the way, all our calls today expire next week. We didn't do weekly calls. Even when we're day trading, we try to stick to next week expiration. That way we give ourselves a little bit of breathing room. Remember, when you're taking on weekly calls, the value of those calls is largely dependent on the stock price and not time and implied volatility. When you have a little bit more time till expiration, then the value of your contract, it has more intrinsic value, and it has more extrinsic value because you still have something called time and you have implied volatility on your side. So if Apple does make a sudden move down, our call won't get crushed as easily as a call, for example, that's expiring this Friday. Now, of course, this does mean that when you take on a longer term expiration, and this is only a week out, this is not long term at all, then it doesn't move exponentially as a shorter term expiration would. But our comfortable strategy is allowing ourselves a little bit of breathing room and giving our calls until next week, at least even on our day trades. So we entered the stock at 10:42 a.m. You can see that 10:42 a.m. was this big move above 146. This was the first time Apple peaked above its high of day. And you can see that Apple right away, it formed another strong green candle. Our price target on Apple was 147 to 148. However, Apple actually started seeing rejection at 146.55. And we ended up closing at 10:48 a.m., which was right over here. We closed Apple right over here because we noticed that Apple was the stock was moving up, but our calls had stopped moving up with it. So that is automatically a little bit of weakness. So we decided to take profits on 3 or 4 of our calls, and then we finally took profits on our final call at the runner when it broke the updated stop loss. So we updated our stop loss to 146. So we took profits on 3 of 4, thinking that maybe Apple would push a little bit higher. It did, but right after we took profits, we updated our stop loss to 146.30. And you can see that Apple came down here once, came down here again. It didn't break, but then eventually it did break our updated stop loss, and we still walked away profitable, closing the final call at $182. Overall, you can see that Apple did give us the exact trade that we wanted. We got into a breakout play. We entered 4 calls for a total of $704 and closed at $764 for a $60 gain. So overall, a very profitable day. It's been a profitable month. You can see that was just a little bit amount of money spent every day. We're not asking for too much money here. You just go in, you're buying 2 to 4 calls. You're not buying 20, 30, or 40 calls. There's no need for that. You can still make a decent amount. There has been only about 4 trading days, including today in the month of July. And you can see that we've already been up $674. So try not to look at trading as a trade by trade profit or loss. You look at it as a weekly, as a monthly basis. That way you can kind of allow yourself to take those losses when you need to. But as long as you're still maintaining at least a 6 to 10 ratio, if you're right 60% of the time and you're sticking to your strategy, you're still going to be profitable at the end of the month because you're right more often than you are wrong. And even if you're profiting just a little bit, it's fine. You'll eventually grow those profits into something much bigger. For us here, we're averaging about $175 a day, and it's been a pretty slow month, to be honest with you. So I hope you guys were able to take a lot from this video. If you do like what you see, please subscribe to the channel and please give us a thumbs up. That would really be awesome. Have yourself a great trading. I'm sorry, a great day and best of luck trading.